Bitcoin is now below 69K at the time of recording, and this week multiple key levels broke. So for me, this is not just volatility, and we're going to look at that. It's a structural shift that forces a serious question: are we transitioning out of a bull phase into a bear market? So in this weekly analysis, I'm going to break down what this change in structure actually means, how it alters my bias and expectations, and how I am adapting accordingly. I'll also walk you through a full breakdown of every Bitcoin bull cycle. So it's going to have, how far price expanded, how deep the drawdowns were, and how long each bull phase lasted. So you understand the framework I used to evaluate where we are now. I also review a real trading mistake that I made, because the idea of good traders never make mistakes is a lie. It can happen, even to the best ones. Remember, we're all humans. So I actually used the wrong order type. I entered outside my plan, and I never should have been in the trade in the first place. So I'll show you how I reduce my risk immediately to stay aligned with my rules, and why missing the next move was still the correct outcome. So in the end, right, price ended up gapping straight up to my target without me. So it's a bit frustrating, but it reinforces what actually matters, right? It's process over outcome and FOMO. So this video isn't about being right on every trade. I'm not a god. I don't foresee the future. It's about risk-first thinking, and I really want to share that with you. Risk-first thinking is the backbone of any real trading plan, especially when market structure shifts and emotions get tested, right? Remember what happened on gold and silver last week. Now look at what's going on in Bitcoin now, right? We need to have a plan for these. So as always, no prediction, no hype, just structured analysis and disciplined decision making. Remember to subscribe for more insights like these, and let's dive in. All right, so here we go, starting with the analysis of Bitcoin, and I actually have prepared a full-on analysis of every Bitcoin cycle to really give you an idea of how I think about this, right? So let's first pick up where we left off last week. So last week we were around here. We realized that basically we broke out of this little range that was being built there. And my ideal scenario, right, was that it may take a bit more time, a few more weeks or months to get out of there, get back up to the previous high, and then, consolidate, ideally have a, contraction of volatility. Now, if you follow me, that I love these, and a break, right? Breaking to new highs, clean air, uncharted territory, and that would be great for a speculative trade. So that's what I was hoping for, right? Last week we broke below that key level and we stopped around there. So we did have some support there as well, right? You can see that price has been bouncing up there and the price literally stopped there. So the second rationale was, all right, so instead of maybe going straight from there, maybe we're actually heading lower. So I'm going to remove this. Maybe we were heading lower and we're going to go back there and so on. And that's not what happened, right? Bitcoin broke through that key level, right? Which was around 77,000, broke through, right? And even as the time I'm recording now, right, broke through the previous all-time high. This black line there, if I zoom out, you can see is a previous all-time high from November 2021, around 69,000 plus. And look, we came quite low, right, down to 60,000, and now we're back. We have a lot of buyers, right, to try and absorb that dip, right? But we are still below. We broke that level and we broke that as well. And I mean, if you look basically since October, so the peak, right, was around $126,000, right, for that bull market. That was the top peak, the highest price for Bitcoin, and that was on the week of October 6th. Since October 6th, look how quickly we have dropped, and we had a drop at most, right, of minus 52%. That's huge. That means that Bitcoin has lost more than half its value since beginning of October. That's just a few months ago, right? But that's not the whole story, right? So first off, right, for me, once we basically broke down of like this level around there, we definitely entered the range, right? We are not in a bull phase since like November, December. We were ranging, right? And my initial plan, or I would say scenario, mental frame, was that it will take half a year, maybe a bit more, to consolidate and break to new high. And that's healthy because we had a very, very strong, uptrend since basically March 2023. As you can see, very strong, right? We went from around $25,000 to 125, so that's times 5. So very strong, right? Now we broke below that key level and we broke below the previous all-time high from 2021, right? We extracted from there in November 2024. A year later, a year plus, we are back below, right? So for me, right, that really invalidates, like for sure invalidates the current bull scenario, right? And potentially starts to smell like a bear market or bearish phase, right? Now I don't know for sure because as you can see, right, we've had a lot of buyers pushing back the price up, right? Trying to really go back past, it seems like go back past the $69 level, right? But we did break through, right? So again, the next few weeks and months will tell us if we enter a bearish phase, but this does not look good, right? For me, like it's not yet fully confirmed, but it's not great. We really start to have the sign. I mean, look at that, right? In basically October, November, December, in 4 months, right? We lost 50%. Sure thing, Bitcoin has done that before. But now we have a lot more liquidity on the market. It's still volatile, but not as much, right? The oscillation of price are not as dramatic as they used to be in the past cycles. Therefore, you have a lot of new investors like Wall Street and via the ETF who are maybe playing the Bitcoin game differently than a lot of Bitcoin investors since 2009. And a drop like that, in my opinion, just doesn't look very good, right? And it would probably take longer than I initially estimated in order to get back there. And that would be healthy, right? You need to absorb that shock. If you were to turn past in a straight line and go back up, I mean, yeah, great for those of you who are still invested in Bitcoin, but it's just unhealthy and not sustainable, right? And we've seen that over the past few weeks and months with gold and silver. We've talked about climax runs, we've talked about trends that get exhausted and that consolidation are healthy, right? Trading is all about the context behind, right? It doesn't matter if someone has an opinion, if the media tell you, if you think that, maybe gold or Bitcoin is actually, it's a rocket, it's just going to keep going up, you shouldn't sell, you're just talking nonsense. I mean, yeah, maybe it will go back up, right? But at the moment, right, the context has shifted from bullish to ranging to potentially bearish, right? I am not going to buy any Bitcoin now. I'm not a proponent of buying the dip and so on, because even if Bitcoin goes back up, which again we don't know, potentially there are good chances, but that's not the debate, right? Even if Bitcoin gets back up, broke past the previous high, right? How long is this going to take, right? It might drop even more, and I'll come to that. I'll show you an analysis of all the previous cycles as I'm going to zoom out. I prepared something for you, but it might drop even further. It might take a year, 2 years, maybe more before even going back there, right? Or even before going back to the price at which you bought in, right? So because the context is absolutely not favorable for speculative bet for me, I don't want to have my money locked into this trade and hoping that it works. That's not the way to go with that, right? The statistics, the odds of you succeeding right now if you were to buy Bitcoin are not great. I mean, sure, you have support, you can try and play the game of bouncing off key level. As you can see now, it's like almost live as we speak, going back and forth this line, right? You could play that game, but there's nothing, at least with the way I trade that tells me that this is a great moment to buy, right? I don't buy the dips. I wait for beautiful consolidation with contraction of volatility and 6 key ingredients, and I have a dedicated video on that, so go and check it out, for explosive setups. These are the asymmetric setups I want to expose myself to, and I don't trade anything else. Right now, Bitcoin is very far from giving me something that I'd like. And I drawn it before, right? It was drawn there in blue, what I would have liked for potentially taking a trade. This is not happening, and it's looking much worse than I anticipated. It can still correct, right? I'm not trying to predict the future. I'm just saying that right now the context is just not great, and it has worsened quite a lot for the past week by breaking through this level and this one. So now we'll have to see over the next few weeks what Bitcoin is going to do. So that's it. That's a simple analysis that I do every week, right? I do not predict, I react. The charts tell us the emotions of the participants. The chart tells us what is the interest in an asset, in a stock, in a crypto, and so on, right? So right now, what do you think the chart is telling us regarding the interest of cryptocurrency and Bitcoin? Well, it's going down, right? It's not great. It's actually quite obvious. So what we do is we wait. And as I said, I personally don't want to have money locked in a trade, one, hoping that it goes back up. I don't trade and invest based on hopes, right? I have a plan and a strategy that I follow, and I put emotions aside, so no hope. And second, I don't want to have my money locked in during that time. I might be in drawdown for several years before, being in the green again or break even. So I can use that money better to take on other trades, or maybe, place more money on my passive portfolio, because right now maybe, the crypto, the stock market doesn't look good. It's not the case for stock market, but I'm just saying. So that's it. These are the 2 main points for me that I wouldn't take a trade there. It makes no sense, right? And the statistics, the odds of me succeeding right now are not great, because I have none of the 6 ingredients that I want for trading. None of them. So I just stay out and I observe, and I will wait until hopefully Bitcoin or the cryptocurrencies give me a great setup and a great entry. Until I have that, I do nothing. So that being said, let me give you a bit of an overview on the analysis of a Bitcoin bull cycles, right? By zooming out, and I've prepared something for you, right? So you can see on the screen here the 5 cryptocurrency, a Bitcoin bull market, right? So starting in around 2010, the first bull market, so in green is basically the appreciation. Let me zoom in a bit so we have all percentages. One more, yes, no, one more, yeah. So the green is the appreciation from bottom to peak, okay? In red is the drawdown from peak to bottom, and so on, right? So you can see the green arrows, red arrows, right? So you can see that basically the overall trend, right? You see, it's like, it's not an exponential, as you put it, I forgot how it's called, but it's basically starting very aggressively, right? And then you can see that it's making a movement like that, which is kind of becoming like flat, right? This is a logarithmic scale, by the way, right? This is what's going on, okay? So you can clearly see that the strength of each bull phase has been weaker and weaker as we go by, right? So let's zoom in on the numbers, right? From roughly, right, peak to bottom to peak, plus 64,000% on the first bull market. The second bull market, plus 60,000. The third one, plus 12.6 thousand. 12.6 thousand. The fourth one, almost 2,000%. The fifth one, which is the current one, 700%. Right, so here we divided, very similar, divided by 6, and cut in like half, divided by 3, right? So there's that, right? Now I want you to look at the drawdown as well, right? So the aggressiveness, the aggressivity of each bull move basically has been weaker and weaker. Now let's look at the drawdowns. The first bull phase had a drawdown from peak to bottom of minus 93%. The second one around minus 87%. So I actually here counted this. This was kind of a flash crash, so I kind of ignored it. So technically it was a bit more than that, but I counted towards the large base, the bottom there of the bull market, right? So minus 87%. The third bull market, right, from top to bottom, right there, minus 84%. The fourth one, minus 78%. So you can see where this is going, right? You can see the trend that basically we've been making big bounce and dropping low. Smaller bounce, dropping a bit less. Smaller bounce, smaller bounce, smaller bounce. Okay? So that's the second thing to look at. The third thing now is look at I measured basically from the extraction of the large base, so the stuff that I trade, the start of a bull trend until the peak, and I measured that for each of the bull phase. So for the first one, we don't really have data, so it's not, and you know, Bitcoin was just like freshly born. It was worth only like few cents, so this is not as compelling. But starting second one, it starts to make sense, right? Because we have a first bear market and a ranging phase and a break. So the first phase was about 1.5 years. Okay, the second phase was about 2 years plus. The third one was 2.5 years, and the fifth one, which is where we are today, is 2.5 years since the peak, October 6th, right, 2025. So I'm not saying that that's it, you know, this means exactly that the bull market is over and this is it. No, that's not what I'm saying, right? Look what happened in 2021, you know, we kind of dropped and then we rose again back to the previous high, right? The drop was not, the drop was also quite severe, right? It was about minus 56%. So it is very much possible that we recover from that. That's not what I'm saying, right? What I'm looking at is just the past cycle. Based on the previous history, right? There's so far no Bitcoin bull cycle that has lasted longer than 2.5 years, right? The other one have been around there, 1.5 years to 2.5 years. So we are past that, and look at the trend, right? After the peak, it just drop aggressively, and look at what we have here. We have the start of an aggressive drop in just 4 months, around 4 months, it's October, we had a minus 52% drop, right? I don't know where the bottom is, right? But you can see basically where like the trend, right? I've even, you know, used these green arrows there from bottom to peak, and I've literally measured basically the amplitude of the move and the angle, right? So, and then I've just copied each of these 5 arrows and I've put them side by side, right? These are the same arrows that you have here, 1, 2, 3, 4, 5. So look at that. That is the angle of each move. That's the first bull market, the second one, the third, the fourth, and the fifth, right? So this tells you that the strength of each move is weaker and weaker and weaker. Of course, volatility also reduces. You have much more liquidity now that, you know, Bitcoin is on Wall Street with the ETFs. You have more participants. Bitcoin is also more expensive. So it's just unlikely that you're going to have, very unlikely, another 64,000% move now that Bitcoin has been up to 125,000, right? So this basically tells us that based on the past, right, and based on what happened like last week and what happened since October, if we look at the data, right, it's just it correlates and it makes sense. It's just telling us that there is a non-negligible odds that we may be entering the phase of a bear market, and it may not be as dramatic as that, right? But it may be a range, it may go deeper into ranging, and we don't know what's going to happen next, right? We don't know if we're going to have more bull cycle like that every 4 years, 4.5 years. But you can see clearly what the data is telling us, and we use the same tool, this arrow, right? The rate at which a trend is going to time climax trend and stuff. You can use that as well to measure the amplitude and the angle steepness of bull phases, right? And it's a simple tool, and it just shows you basically, I mean, that's it, right? Just look at the arrow. It speaks for itself. You can clearly see that this has been weakening, and that based on data, based on facts, there's a non-negligible odd that this there is not looking great. Again, I don't see the future. I don't know. There's a good chance that it recovers. It may very well surprise all of us, and that's great. I'll modify my scenario accordingly. But I'm just taking the facts, and these facts basically strengthen it just strengthen the opinion or scenario that we may assist at something even uglier on Bitcoin. So time will tell. That's all. But I wanted to share that with you because I actually found it very interesting and compelling, and it was interesting that what are the odds that exactly 2 years and 6 months basically between the fourth bull market and the fifth one, right? But it just makes sense, right? So that's all. That's my bias. So doing this analysis strengthened basically my scenario and my simple weekly analysis, right? So you can see that there are non-negligible nonsense arguments supporting a potential bear market, or just maybe it may reach like lower, but definitely it's going to take probably longer before getting back to this all-time high. So again, time will tell. Moving on to analysis of Ethereum now, and it's a little bit of the same story. We broke past that support there, and we are definitely now back into a range, right? This is a big range, you can see, right? This is a big range like that. So definitely it's gonna take longer. I would say maybe toward the end of the year we may we're probably gonna head lower there, right? And we may reach back toward the top, maybe toward end of the year, early next year. But this is the amplitude of that is very high, right? It's minus 64%. If we go all the way down around there, we are at around minus 70%. That's a very big drop, right? So it would take longer. It would be healthy that it takes longer to absorb and go back, right? So maybe a multi-year kind of consolidation on Ethereum. We will see, but it just correlates with the analysis of Bitcoin that we've just done. Analysis of XRP now, and unfortunately XRP has broken this lovely triangle that we were talking about for a few months. So that definitely for me, right, cancels my initial scenario that we had this big triangle, we extracted from the big triangle late 2024, we had a massive run up, we got blocked at the previous all-time high, and we were forming a beautiful triangle with a reduction in volatility and a break, and would have loved to take a trade there. Unfortunately, we broke that support initially, right? We were drawing it like this, and then we hit lower, so we kind of modified it a bit, and then we broke below, right? So so I mean, where is the next bottom? I mean, it's right there, right? There's potentially some support there, maybe. I don't know, but definitely a very big range now, and it may take a few years, right, to have something of like quality and take a trade. Definitely what happened last week has been damaging the picture that we had. So unless a miracle, beautiful recovery, but it looks unlikely at the moment. So that's my vision for XRP. And again, time will tell. Moving on to the analysis of gold. And gold went quite low this week, and recovered quite a bit, right? So I mean, again, it's another Darth Maul. Last week we spoke about this huge Darth Maul. We had feel free to go and rewatch that, but an extensive explanation on Climax Trend and gold and what's happening basically with the profit taking and so on, and how I would advise a trader or someone in position to manage the trade when such scenario occur. And by the way, I also have a separate video on the 4 types of trend scenario that I watch for and that I account for in my trading plan. So feel free to go ahead and watch that. So a lot of buyers, you can see we went quite low, right? Look at the side of that wick, and also quite high. And a strong body, so it's a massive doji Darth Maul, right? Again, that means pause and uncertainty, right? I don't know if the bull market is over. but for sure, right, for a speculative trade, I've been out last week. Last week already, right? I've been out of that. So that's it. I'm not trying to play the game of being right and predicting, and I don't care about being right. I'm just following a plan. I know that plan allows me to statistically make money more often than not, and that sometimes I have good surprises that has climax runs like that, and I have a technique, a strategy to capitalize on that, and that's what I do. So I wouldn't say necessarily the bull trend is broken, but definitely here for me this is a massive uncertainty, right? It's a big uncertainty, and I actually don't know what shape this could take, but it might actually head even lower, right? It might head even lower, consolidate for longer. We might have might revisit the previous high, but we might have a huge basically consolidation there on gold. I don't know, I have no idea, but you can see this has been very volatile and weird, and it just looks very different. You can see how different it looks from the past, right? Large base, extraction, braid, beautiful, great to take position there, also in passive portfolios and even a trade. Run up, first consolidation, beautiful. That's a trade that I took. Beautiful setup there. A run up, climax run toward the end here. Profit taking, maybe end of the trade. Another beautiful setup, beautiful trade. And then look, boom, almost we're in a climax run here, I believe. Sharp consolidation, we continued, and then vertical. I mean, look at the amplitude of that. This does not look like anything before. But if you look closer, you can see how we went from just sideways, nothing going on, start of the trend. Look at this was flat, right? And then toward the end it started to go up, and boom, now we go up sideways, we go up sideways, we go up more aggressively, right? So the rate increase sideways, even more aggressively, sharp correction sideways, and then boom, vertical, the wall, right? So that usually corresponds to the end of trend. Emotion is high, there's mania, euphoria, a lot of profit taking, a lot of uncertainty and fear, and that's what happened there. So big uncertainty this week. Let's see what happens over the next one, but it definitely confirmed everything we've been talking about for a few months now. And moving on to silver, this confirms it as well. Massive, ugly, horrible, huge red week, not this week but the week before. And this week it's actually a bit worse than for gold, because we had a big push up and also big push down, but couldn't quite make it, right? Then we closed even further. So look at the numbers, right? From the peak to the close, it had a drop as low as, I think it was 30%, 40%, 36%, right? And from the open to the close, we still had a 23% drop 2 weeks ago. And then this week, from peak to bottom, another 20%. So this is a lot, right? This is a lot from the peak to where we are today. We are down, 36%, almost 40%. So that's massive, right? You can see that this trend is broken on silver, right? You can just see like something happened there that is just not consistent with what was going on, right? So that's all. We explained that also last week and a bit on gold previously. We talked about that. So the next few weeks will tell us, are we assisting to just a very large, massive, consolidation that, looking at the amplitude of that, right, it would take longer to maybe go back. And so maybe toward the end of this year we could have something going back up, but we don't know, right? This might be ranging for a very long time. You might just correct, it might tank more. It's just has been too volatile to tell, right? This basically means, for me, right, the party is over. That doesn't mean silver is not going to recover, but that drop was so big. Why? Because we did say if price goes up too far, too fast, in a straight line, we enter a climax or super climax run, which means emotions are high, right? People are not thinking logically. People are joining late. Look, gap, even higher, and then drop. This is not sustainable, right? It's not sustainable. So that's why this happens. And almost every single time when you have a climax run, this happens. That is why you have a plan to account for that. And yeah, that's all for silver. Moving on to the stock market now, and while there's nothing much to add, we have another pause, another doji here on the S&P 500. And yeah, you can see we are still, our scenario is still at play. We are still consolidating there on the previous high, and that is good, that is healthy. So there's nothing much to add here. And if I move on now to NASDAQ, it's very similar. We actually had a bit more volatility, so that scenario there is a little bit different. We may have just a bit more volatile triangle, flag on NASDAQ. So now it may look like something like that, right? So yeah, maybe towards Q2, start of Q2, end of Q2 this year, we may have a break and we may have another bull phase. And at that point, I'd love that, and I will be more aggressive with my risk management on the US stock market. Moving on to DAX now. And well, DAX about a month ago had a beautiful big breakout, same as on the CAC 40. Then it kind of pulled back, it closed below, and now we are just back closing above. So this may just be a deeper pullback that's going on. So we closed above, so that's great. So I would say that now definitely, because this happened, right? We actually didn't quite clear the previous the range, right? We went back in just a couple weeks, 2-3 weeks, and now we're back above. So similar to the CAC 40, which I will show you in a minute. Yeah, I would like to have basically a break above that will confirm we are now in a bull trend to be aggressive with my risk management again. And now moving on to the CAC 40, and as you can see, it's a bit similar what happening on DAX that what happened on the CAC 40 then. And the CAC 40 basically had run up, pull back, sideways, tried to go up. That was at the same time actually as the DAX, the same week I believe, and then pull back within the range, and now we had a strong week. So we are still in that range, we are still stuck a little bit. And yeah, that's again what I want to see. I want to see a clean break and validation after 2-3 weeks after that to confirm that there is a new bull phase starting. Now we haven't had confirmation. Moving on to the Euro Swiss franc. So I talked about that last week, and I just wanted to touch on this again. So as you can see, we had this. We are in a big channel downward channel, right? For many years now, right? And we had the multi-year, 2 years actually, since 2024, sideways consolidation, but it's kind of like the stuff that I trade, but inverted, right? Where we have a cup and kind of like a handle, actually a double cup or cup with a handle with many bounds, right? And look how many times we came close to that pivot line, right? Resistance support area. 1, 2, 3, 4, 5, 6, 7, and break for the first time after 2 years, break below that level, right? And now we tried to pull back, didn't quite make it, we closed below, so that seems to confirm that we may assist at the devaluation of the euro against the Swiss franc for the next few months. So that time will tell, but I just found that setup very interesting to show you that this approach works also for downtrends, right? And finally, I would like to tell you about a recent trade that I took and the mistake I made. That's what I mentioned in the introduction. So this was on the NICE, right? So on the US stock market, on a ticker called KB Financial. And so we had a beauty. I'm not going to dive into the details on the trade analysis, right? I just want to show you the mistake. Feel free to go and check it out, like the pattern in weekly if you want. This is a daily time frame. So we had a beautiful pattern there, right, that I like, reduction in volatility and a break. So the break wasn't a gap, but it was very clear. We had a lot of volume, so I love that. And my planned entry was there. I want to enter on a high above the breakout, and I also want to set a max price because I do not want to enter on a gap up beyond my planned entry, right? Because that would increase my risk. It would basically make my stop being too far from my entry and therefore make me risk more than I planned. I don't want that. That is why I use a special order type, which is buy stop limit or buy limit stop, right? Where I have a stop level at which if the price crosses that level, a buy order will be triggered, right? But it's a limit, sorry, yeah, and limit order. And I have a stop, meaning that if price goes beyond that max price kind of limit, the buy order will not be triggered. And I made a silly mistake, but it happens. I actually just used a buy limit order. I forgot to, for some reason, I think I clicked the wrong button. Maybe I was tired and I just didn't use the buy limit stop. So I did not have a stop and a max price. Therefore, I only had basically, if price crosses my limit, I buy at market order. And well, you know, that was a breakout. My order was sitting there for 1, 2, 3 days, still not executed. And then boom, we had a gap up above my planned entry, right? Except that I didn't have a stop for that, no max price. So my entry was there compared to like somewhere here, right? That doesn't seem like much, but this maybe 0.2, 0.3, 0.5% depending where your stop is, like extra risk, right? So this is not great. It's not great at all. So I had few options here, right? And my plan SL was somewhere in there, right? So that basically increased my risk. There it's actually, it's quite a big difference, right? From the bottom there of the triangle to the orange arrow. So I have few options here. The first option was I immediately close my trade and that's it, you know. I didn't do that because this pattern was just really good quality, so I decided to have another approach. I wanted to still take the trade, so I stayed in position fully, but I basically brought my stop up somewhere. I think it was somewhere around there. And around I think it was below actually the resistance area. So that basically allowed me to keep the same risk or very close to initially, right? Like the distance between here and here, I need that to be very similar. And as you can see, this is what we have there, right? If my stop was under, I had this distance that was very similar to previously. And that's what I did. I moved my stop. Again, it's not the best because technically I shouldn't have been in that trade in the first place, right? My trading plan and the type of order I have in my strategy protect me from that. It gaps up without me. I don't want to be in that trade, right? I'm not trading that. But because of that mistake and because my exposure was actually small, I decided to, run the trade. So that's what I did. I brought my stop up to already correct my risk, right? So fix that. I don't want to be risking more than what I planned. Then look what happened. Basically, we had a pullback, right? So now I was in drawdown and on that trade, and then on the fifth, basically the pink arrow, we had a news earning release, right? I don't want to be in a position when we have news. Sometimes I partially close, sometimes I close fully. Here, considering that I made that mistakes in the first place, I decided to fully close my trade on the fourth there, where the green arrow is. So what happened next is I want to enter on a new high on the above the high of that daily candle, that session where I exited my trade before the news. The rationale is if the news is positive, I will be executed on the high and I will be taken with basically the trend if there's a really big impact and a nice pump, and basically I will get the benefit of positive news. If there is a big gap down, that's mainly why I do that. If there's a huge gap down or big gap down, then I'm not executed, and that's great. That's great. I avoided negative setups, a negative outcome, and I'm done. I'm out of this trade. It's over. And here, well, this was not a mistake, right? We had a very positive news, very well received, and it opened on a massive gap up, right? Which did not basically, and this, my take profit, my partial take profit was somewhere there just at the end, right? The 1-to-1 ratio or something. So it gapped up above my planned re-entry, which means I was not in the trade and it just went to take profit without me. So no take profit, nothing, and I actually incurred a small loss. I exited somewhere there. My entry was there. A small loss on this trade, right? And that's okay, right? This is the planned behavior. This is okay with me that that trade gapped up and went without me, because that is why I have that in place, right? You need to remember that, it's easy to think, oh yeah, but if you had stayed in position, you would have had a winner. Yeah, that's true. But what if this gaps down to the max, right? I've had one time a trade that after the news gapped down like 15% or something. Like it went from somewhere there all the way down like here. That was horrible, right? But I was protected because of this mechanism. So it's all about risk first. It's about the process before the outcome. And before FOMO, it's really about following your rules, because we are here to manage risk. We expose ourselves, we follow a precise strategy, irrespective of what the market does. We just follow what we've decided to do in advance. And then when something occurs, if A then B, if C then D, that's it. We just follow the plan. As little emotion as possible. Weekly time frames, they move very slow, once a week. So the markets are closed every day when I'm doing my routine. It's stress-free. It's actually very enjoyable. It takes me only a few minutes in the morning. It's great. And these rules basically allow me to manage my risk. And imagine, if you have a very large capital, someone trading with hundreds of thousands or millions of dollars, right? Or euros, wherever you are. Your risk per trade is probably going to be a lot smaller. You may be very selective with how you trade. You want to trade only the quality stuff. You don't want to have these kind of surprises, because a 0.5% or 1% a bad surprise on the trade, right, with a huge gap down or something, is quite painful on $1 million account, right, or 500K or whatever. So that is why we manage risk irrespective of the size of capital, whether you're trading with 5,000, 10,000, or whether you're trading with 100K, 1 million, 10 million, you have to abide by the same rules. You trade like a pro even on a small capital. It doesn't matter if your loss means like $5, $20. It doesn't matter, right? You have to follow this rule regardless, because the day that you'll have enough capital, or as the years go by and your capital increase, you will get better and better, and you will follow this rule flawlessly, easily, and you will have no emotions, right? So that's it. The point is not to resist emotion like in Hollywood, when they go all in and they bet and they are stressed, or like you see day traders on the internet. Some people make great money, right? It can be extremely time consuming, extremely stressful, and having tried that myself, it's not pleasurable, right? I just get way more result for way less time doing swing trading. And so for me, that's the way to go, right? So just wanted to show you that as clear as some of my explanations might be, and I'm getting really good result with that. And just a few years in, I think it works out great for me, and I get better and better every day, every week, every month that I do this routine, and also that I share that with you, right? It really helps me to anchor my learning. But I've been doing that for quite some time now, and I've become pretty good at it. And yet, you see, I'm not protected from mistakes, right? This can happen, and this one was costly. Not much, it's a small loss, but still, it still resulted in a loss because here I shouldn't have been in that trade, as I said, right? So if that happened, my order is not executed. That's it. I move on. This goes to trash, and I look for other opportunities. And here, it would be easy to feel like, oh no, now I have a loss. I didn't re-enter, and I could have made money. So same thing. Be careful of both sides of the coin, if I can say, right? Here's negative emotion. Oh, fear. I entered too high. This is not great. So instead of completely exiting right away, I kind of like manage the situation. And here, basically, it's the opposite, right? You have just FOMO. It's like, oh no, I could have just made money. That's not great. So you have to be mindful of that, and that's why we have a plan that we follow, and that protect us, our emotions, and our capital. And on that note, I am done. I wish you a great day. Hope you enjoyed it. Remember to subscribe to this channel, Telegram, head over my website as well and drop your mail if you want to be informed of when I'm going to release some new stuff. And that's about it. Have a great weekend and see you next week.